This is the standard. This is the work. This is the mindset behind the results. Built, not bought, earned, not given. This is the room where leaders are different. Built through consistency, proven through execution. Hosted by Michael Sweigert. Inside the champion's herd. At ALCOVA Mortgage.
Welcome to Inside the Champion Circle, powered by ALCOVA Mortgage. Your host, Michael Sweigert, sits down with top producers, industry leaders, and some of the most well-known mortgage influencers in the world and engages them in high-level conversations on what it takes to be elite in the mortgage industry. ALCOVA Mortgage, Equal Housing Lender, NMLS ID 40508. Michael Sweigert, NMLS ID 1240868, NMLSconsumeraccess.org. Terms and conditions apply. All loans subject to credit approval. Grab a drink, put your headphones on, and enjoy this week's guest, Lindsay Frangie.
Yeah, what's cool is most of the first couple episodes was in the slow part of the season. So now everybody's like ramped up and ready to go, and now everybody. It'd be kind of cool to see like the faces of all the guests through the progression, because like I feel like in like February and March we're all refreshed, and then by the time we get to July we're gonna have like, no life in our faces anymore. Right? And then you'll see the progressive change of my farmer's tan as the sun comes out in Ohio. That's actually my favorite.
Right.
You guys down south, you guys are just always kind of tan. Well, I'm gonna get the farm. You're gonna see like I'll have like sunglasses, tan line. I'll have like where my backwards hat is. Yeah, absolutely. It's coming soon.
It's coming. Yeah. It's the end of April already.
Yeah, that is wild that it's May. Like I said, it's right in the peak home buying season. For you guys, though, like, do you see it as seasonal down in, because you're down by Atlanta, right? You're down in Georgia?
Yeah. I'm in Metro Atlanta, and it's really, no, we don't have any, seasons where it's not really that busy. Sometimes nice. November, December are my busiest months. So which doesn't bode well for family, time. So, I would rather have a slow season. But then again, just for, family's sake and spending time with the people that matter. What good is working all the time and making money if you can't enjoy it a little bit?
I guess I never looked at it that way. Yeah. Cause we, oddly enough, in Northeast Ohio, it'll get busy around November, December, which makes no sense because it's cold, it's gray, and it's like it's the holiday season. But come January, February, see, this is where maybe it gets a little tougher, because like January, especially in a sales-oriented position, we're business planning, we're hashing out our goals for the year, we're reflecting on the previous year, and all we have is time, because you're out there, nobody's looking at houses. And you're out there with your team, setting your goals, trying to get the habits in place, and then you're not seeing the results as much. But it is kind of nice because you get a little bit of a downtime. But
well, you know what I did this year, and I know there was a report going out that basically credit card use was through the roof for consumers. And so I basically did a video, and I was driving, and I said, listen, everybody's up to their eyeballs in credit card debt. If you own a home, we've done a mortgage, call me. We can do a HELOC. We can do a second mortgage. And so I spent the first 2 to 3 months of last year doing steady HELOCs, fast HELOCs. Fixed rate HELOCs, second mortgages. Some ended up being cash out, but a lot of those people had 2s and 3s. So, and they weren't looking for a ton of money where it made sense, where the blended rate would be that much better.
Talk about the blended rate, because that's a huge thing that people don't realize. Like,
I have a calculator.
Yeah, absolutely. That was kind of, so I started in this industry in banking, and I remember sitting in my office one day, like just calling everybody with expiring home equity lines of credit, where it'd be like $100,000 is their line, but they have $95,000 borrowed, and I could go back and look at the history, and they never pay this thing off. And I'm sitting there, I'm like, there's got to be a bit better way to do this, right? There's got to be like you just paying interest only and not getting anywhere on it. So I
Exactly.
started looking at like at the time we had a really nice like fixed product that would just it was fixed. It was adjustable, but then after the 7 years, it would go into a fixed rate. The way that it worked, it would no higher than like 5.25. So it would adjust from the 2.99. Whatever I think it was like the LIBOR. I don't know. I don't really get into adjustable rate mortgages too well, right? But and it would have a cap at 5.25, and all these people were paying like 4% on their HELOCs, and I'm like, hey, like I understand that your first mortgage might be at a 3.625 or a 4.625, whatever, but when the bulk of your debt is in credit cards or the bulk of it is in this home equity line of credit that you're not making any dent on, like what does that interest rate matter? It's just money you're giving straight back to the bank and you're not changing any of the principal. So it's kind of eye-opening when you get somebody on a Zoom call or in person and you actually go over, hey, I get you're at a 3.625 on $100,000 borrowed, but what about that $35,000 credit card debt that's at 29.99% or whatever it is? What about that home equity that we've seen it in the tens? And let's actually take a look at your whole entire portfolio, what your entire debt standing, because it is eye opening sometimes. So I think that this past couple years, I think we've seen a little bit more of that. So
Well, and we're going to start seeing more people adjusting, dealing with the fact that, hey, I already took out a second mortgage for that $40,000 I needed in credit card debt, and now I've got a 9% on that. I've got a 3.5% on my first mortgage, and I need more money. At this point, if rates, continue to come down in our favor, we look at that blended rate and say, okay, when is it going to actually make sense? And now you need a third mortgage. Let's look at that. Who's willing to go in third position? Do we have to pay off the second mortgage? Those are, all different ways to structure the loan that a lot of beginner loan officers don't really look into. Being an advisor is really important. And, there are some people who it made sense based on how much debt they had, car payments. I mean, I've structured a purchase where they wanted to put down 20%. I have to put down 20%. I don't want to pay PMI. And I'm like, listen, you're paying $3,000 in car payments and consumer debts. How about we use 15% of that to pay off everything you have, put 5% down, pay that PMI at the rate of appreciation you're going to be 3-5 years, and you may be able to drop that mortgage insurance. Or we can do a single premium and buy it out. I mean, there's a lot of different ways to look at it, but, people have that mindset of, I don't want that PMI, but then you come up to me with $3,000 in loans. And it's like, hey, this is monthly output is monthly output. You can word it however you want, but the mortgage payment, if it can be your only payment, then have it that way, because we know consumers are going to spend money again.
Yeah, and I teach a class to real estate agents. I actually call it "Get the Sellers Off Their Ass." Actually, is what I call it, and it shows people because the number one thing that every single person balks at is interest rate, and that was what we were seeing in 2022, 23, 24, where everybody's like, "Hey, I'm sitting on these low rates," or those low rates were in the rear view mirror. I mean, they were right behind, and they're like, "I'm going to sit on the sidelines." But during that time, equity grew so much. And I don't know how I can tell you so many people that I would see where they would come to me with, trying to get pre-approved. Wow, we don't want to really buy because we don't want to lose that low interest rate. But they had $40,000 in credit cards, or we'll say $30,000 in credit cards, $40,000 in high interest auto loans, because we remember what happens to auto loan rates during that time. Student loans, and their monthly budget at the time, their mortgage was $1,200, but what they were spending monthly was like $3,200.
Yeah.
So then I'm like, hey, check this out. And I do this with my cash out refinances too. And I'm like, you're paying $3,200 right now, correct? Yes. Okay. So if I was to do a cash out refinance, or if I was to do a brand new mortgage, right, and I would pay off all of your debt. So let's just start with the purchase, right, where I'd get you a brand new mortgage. So we sell your house and you have enough equity in that home that you end up getting $100,000 and it pays off all your debt. Yes, what we're doing is we're taking your mortgage from $1,200 up to $2,200 or $2,300. But now you're saving almost $800 per month in your overall monthly budget. Hey, I have a financial advisor, buddy. Actually, my favorite thing to say to a client is like, so who's your financial advisor? And they're like, well, I don't have one. Well, I'm like, well, you're sitting here advising me financially. You have to have a financial advisor if you know that you're in a good financial position with your 3% rate and your, all this debt. And they're like, no, I've never talked to anybody. I said, okay, well, here, you need to talk to somebody. Imagine putting something like $800, like I just told you, that you're saving in your monthly budget in a financial instrument that, I don't know, tied to the S&P that over the past 10 years has gotten an average of like 11% year over year. So imagine the generational wealth you could start building. Not only with that higher mortgage payment do you get the equity in the new home, but now you have $800 shorter or less a month in your budget, in your monthly budget. And you're creating in 10 years something that, maybe could be worth $50,000, $60,000, $70,000 on top of your normal investment account or your retirement account. So it's, when you look at it, it's almost, as a consumer, I always say, don't look at just this narrow-minded right here.
Compartmentalized. Yes.
Yep. Or just the interest rate. You have to look at the overall monthly thing. And I've had so many, just on my own social media and all my content, I've done a lot of stuff about this, and I get so many people like, oh, the loan officer's talking about not looking at the interest rate. And I'm like, no, I'm telling you to look at the interest rate. I'm telling you to stop just looking at one interest rate and look at all of your blended rate, like you just mentioned.
Well, and people will tell me, well, I don't want to pay that off. That's a zero interest loan, but I'm paying $180 a month. You're paying $180 a month for the next 32 months. So whether it's $182 at 0% because you got zero interest and you're paying it back before the interest kicks in, it's still a payment that's coming out, and you want to lower your overall debt load and payment, and you're complaining about the mortgage payment, but it comes down to debt load. I mean, if the car, the mortgage payment, the installment loans, the furniture that you put on, whatever, layaway or rent to own.
1990s called layaway. Let's go.
Listen, I just pulled a credit report that had it was a 421 middle score, and it had 26 pages of collections. Not one good account. You got to try really hard, and I'm still amazed that people come to us and ask us for $300,000 when they've never paid anybody on time ever in their lives.
Well, and I think that's the Barry Habib said this when I last heard him speak, and he said, no longer are people going to pay for information. And they are not going to come to you for information. They're going to pay you, and they're going to come to you for knowledge. And that's the biggest thing that, what's cool about ALCOVA is they really set you up with all the tools at a corporate level. I mean, our Tactical Tuesdays that we have, the guests that we have on that, talk to us about, where Barry Habib has been, a frequent guest, but some of the industry's best. And we're able to develop that knowledge. And I just talked about this on my actual personal podcast that it's almost like knowledge is the only thing now, especially as a loan officer, that we can control. So there's so much out of our control, whether you talk about products, whether you talk about interest rates, whether you talk about the market, right, where it snows and I can't, nobody's buying houses, but you guys don't get to experience that. But there's so much that we fret about or we build our business around, as opposed to the one thing that we can control is knowledge. Whether if we don't know certain information, or we don't know the statistics, or we don't know how to present this, or we don't know how to advise, we're able to learn that. And pass it on. So I think that's what's cool about ALCOVA is that, because I know you've been here for, I think, about 6 years is what you said?
6.5 years. I'll be here 7 years in December.
There you go. So we're having a party. But then, so you could attest to this, that we have the ability to, if we don't know or if we don't have that knowledge, ALCOVA absolutely makes it available to us, whether it's software, whether it's some sort of technology, or if it's like a speaker coming in and talking to us.
It's amazing. I mean, honestly, when you need some information, whether it's data, whether it's, social media guidance, whether it's, a product that we may not have that somebody told you about, ALCOVA goes to work, and they actually, look into what you're asking for, and they find the solution. And there's not many companies out there that actually are responsive to that kind of stuff, because we're on the front lines. We see exactly what's working, what's not. what others are doing. And, we bring it to them and they provide it, whether it's Tactical Tuesdays or Wednesday wake ups. Those are always helpful too. We have a stellar training team. We have, training even on the side for new employees that they let people sit in. Like if they're teaching about, Total Expert that day, they'll, let you come in and sit down and learn about it if you want a refresher. There's so many things, and, having the knowledge, and also, one big thing about ALCOVA that I love is how we are team based. I mean, we want to help each other. There's not very many, I can't even think of one that's not willing to help you if you were to reach out to them. If, you wanted to know more about it. We have some really, really impressive guys throwing some big numbers up for closings. And a lot of what they've been doing are things with your CRM, things with social media, things with follow-up, application questions, things to elaborate on more when you're taking an application. Like those are things that we have learned from our teammates that is so invaluable in this industry, because we can take it and we can run with it that day. We have a marketing team that's amazing. They can get something out to us, in a matter of 24 hours for us to run with.
I think because you hear mortgage, like, if you're out like being recruited or you're interviewing different mortgage companies, you always hear like, oh, we have a marketing department. And it's always like, yeah, okay. Yeah, sure you do.
Yeah.
All right.
Yeah.
Here's what's crazy about our marketing department. And I think I'm their like biggest advocate. I know that Rachel and her team always love hearing me talk about them, because they're always like, hey, listen, anytime I reach out to them, like whether it's with my CRM or whether it's a campaign I want to run, whether it's mailers,
a flyer you need for an event. Yeah.
They literally send me an invite to do a Zoom call or contact me right then and there, and we build through it. I mean, I don't know how many hour-long calls that I've had with with like Nicole, with our CRM, and building out my own.
You're not going to get that anywhere else. Like,
it's awesome.
Yeah, it is. And a lot of people, like you said, talk about a marketing department. I mean, my marketing department, we had, the flyers, and we had a lot of flyers, but they were one size fits all. You could not alter it. We had a team of lawyers that you had to go through if you wanted to. And it just wasn't a pleasurable experience. So you just did without, if but here, I mean, we are given the tools, we're given, the experience. We have business pages that they help manage. We have, Total Expert, like I said, they have auto emails that can go out on our behalf. So they try to make it as easy as possible to really automate your business, the things that are the most tedious and take the most time.
Yeah. I think it goes back to like 3M, and I've talked about them almost on every episode, so they're probably getting tired of me talking about them. But
let's not talk about them. No.
It's nice the way the structure is, because it's like Bobby's always like, hey, like, he's got that loan officer mindset. What can we do to make it easier? What can we do to streamline this? And not just like I've said it before, not just the loan officer. They think about, okay, if we want to make the consumers experience like, white glove service the best.
Can I tell you something? And I don't know if I'm going to get in trouble for saying this, but.
All right, we're going to mark this down if we got to edit this. All right, go ahead.
Yeah. Ask Bobby before we run this. But, so I have been really active on LinkedIn lately, and, I actually have a connection that is a loan care representative, and she had a post that she made, and it was talking about all these mergers and acquisitions that are going on, where Rocket and UWM and all these companies are buying up other companies. They're partnering with real estate companies or buying servicing companies. And so to protect our servicing portfolio, I always loved loan care, because loan care will not go after your clients. They don't do anything other than service. And I had commented on her post and on LinkedIn, and I sent it over to Bobby, and he emailed me back within, a couple hours. And he was like, hey, saw that, we're definitely, thinking about who we're going to use for servicing, and we'll keep it in mind. And that was like 2 months ago or maybe a month ago. He emailed me yesterday and he said, I just want to let you know, we went through, we considered all of our options, and we decided we're going with loan care. We're going to be ramping it up in the next couple months, and you'll see it soon. But I mean, that just made my heart so happy, because that helps every one of us as ALCOVA loan officers, because loan care will service your client. They'll send them back to you. They're not going after your clients after 6 payments to go and refinance them. They're not going to snake them when we order a payoff. Like, they are good people, and I've always liked them. We had loan care as a servicer when I was with a company that serviced over 250,000 loans. And they always, of course they all servicers can get a bad rap online because they, don't explain the escrow analysis right. They're going to get blasted, those kinds of things. But, to have these big conglomerates, these big companies going in and partnering with PennyMac and, all these other big servicers, it worries me, and it worries, everybody as a team that, we would like to work with a servicing company that's not actively going to try to poach our own clients, because we know what's best for them. They don't.
Sure. Well, 100%. I know this, like I say this all the time, but the only, constant in our industry is change. So it's always rapidly evolving. So it's cool to kind of tie it back to, it's cool to hear that, ownership is, remembers what you said is like a month or 2 months ago that you sent it to him. So not only did he just remember that you sent it, he also went and investigated and he trusted, you, who's on the front lines, and you're out taking care of our customers and taking that and trying to make our company better. And I think that's like the easiest way I could say, or that's a perfect example that we could tell everyone, like how ALCOVA, the leadership, the whole culture is that we have our power up, our sales conference coming up.
Yes.
And there's nothing about that sales conference that is like, all right, here, sell this product. It's almost like all the loan officers getting into a room and making everybody better, right? And then taking, then we bring in a guest speaker to pass on, whatever. Like this power up is Dale Vermillion, so that's going to be an awesome, hour and a half, 2 hours that he's with us. But it's like almost the time for leadership to get in front of us. Here's what we're doing. What do you guys think? What can we be doing better? What can we all be doing better? How do we progress? So it's definitely a unique culture. And I think that's one thing that you can take away from every single episode of this podcast so far, is that there is no other mortgage culture or mortgage company culture like that what we have at ALCOVA.
There isn't. And I've been in this business for 24 years. I got out of it, got into it after college. I hated math, and look what I do every day. I am loyal to a fault. Like, I will stay at a company until they are sinking, and I'm like, swimming to shore. But I was at my last company for 9.5 years. I was at a broker for 5 years before that. So I know what leadership is, and I know how I've been treated where I've been, and the culture here, the camaraderie, the togetherness that we feel, and the helping of each other. And 3 a.m. being my age, the partners, the owners of ALCOVA, they are not, old geezers who are, looking to sell and get the top dollar. They are invested. They care about our industry. They care about the company and each family that they employ here. And that means a lot to me. Like, I've been a lot of places, and I've been just a number, and it's not like that here.
Yeah. And I want to kind of play off of something you said, because one thing, I think when you and I first met each other, it would have been my first power up at our first sales conference. I can't remember, but we kind of looked at each other like we knew who each other were. But go back to our culture here is like loan officers we're like a team at ALCOVA. Like, we're always willing to help out. And one thing that I think you and I have a very similar concept of is that also the rest of our industry, yes, there's competition out there, but networking and building with other loan officers is actually crucial to growing your business. And you and I were part of a couple different loan officer groups. And I think the reason why you liked my posts is because I used to be sarcastic and hilarious on most of my posts, right?
Yep.
I might have not against people, but might have just, like to stir the pot a little bit.
You like to ruffle feathers. That's
I like
definitely.
just a little bit. Just like,
Just
hey,
a
hey, look, I'm here. I'm the content guy. Let's make some content out of this, right? So, but the importance of, because I've always said that forever, like with all my team here, hey, look at other loan officers in your market. There's plenty of business for everyone. And our real competition is not the guy that set up a shop across the street from you. Your competition is the big banks or the call centers or the people that don't care. They're not actually literally in the community. And that's something that I've always felt that way, and I've tried to teach that with all of our staff. And then
I'm not afraid to help others in this industry. And ALCOVA, we have a bunch of people like that,
absolutely,
Yeah.
absolutely.
And so like
it's
yesterday
refreshing.
I got, what?
It's
Go ahead.
refreshing.
Yeah, it is
It's
refreshing.
like it's not normal because we're so competitive, right? The last episode was Ryan Charles, who we talked about. He was a professional athlete, played basketball professionally. And this industry is so competitive. But when you actually, and I'm not saying that you can't be competitive. What I'm saying is when you realize that maybe your competition or maybe people in this industry, other loan officers that are doing the same thing you are, if you embrace them. And it's not like keeping your enemies closer. It's not something like that. But when you embrace them and hear their struggles, maybe there's a loan program you don't have that you can refer to them. Maybe there's a client that they can't get worked out, but they can, refer to you. And at the end of the day, if you both can have that positive mindset and grow and help each other build, it's only going to benefit. I mean, whether you believe in karma or not, it's good karma, right?
Well, that to me, I mean, I love to help educate. And whether it's my clients or other loan officers, I love to help people solve problems. And so, I am always willing to help another loan officer at ALCOVA, because I was talking to Kimberly in Florida yesterday, and she was talking to me about a program that I did not know that we even had. It apparently it's a broker relationship that we have, but it's actually a new product for them. And it's kind of like a no ratio. And I was like, what? And I thought about one deal that it could help. And then I mentioned to her, and I'm like, hey, well, I'm the queen of HELOCs, like those fast HELOCs, our fixed HELOC, those deals. She's like, what? Oh my gosh, I'm going to call you tomorrow because I have this deal and I need to know how to work that system. And, that's what it's about here. And, we all have things that we're better at. And unless we collaborate, we're not going to know how we can help each other. And my enemy, when I have a very, really, really tough client, it's all a joke that everybody says refer them to your worst enemy and just tell them they'd be better off there, because we can't fire a client. But one thing I will say is that I will send them to one of the banks that I know is slow as molasses. They are going to be so painful that they're probably going to come back begging to work with me. You know what I mean? And I don't know where I was getting with that, but your laughing just made me lose my track of mind.
Okay,
because you're probably thinking about that person that you refer. You're like, dude, yeah, I do that.
No, but so the Facebook groups, right? So you're big, with the Facebook groups that I remember. Man, it was like probably because I started doing writing mortgages just on the retail side like 2016. And I remember thinking to myself, I'm like, I bet you there's some Facebook groups. And I remember going, and they were small. And obviously now you could see them grow. And now some of them have, 50, 100,000 members. And it's like, that's insane. But it's a cool community. And I remember it was, I think the best way to describe Facebook is it's the town hall of our generation. And it's awesome because it's the only way you used to be able to network like that was going to a conference or going to your company annual conference, whatever conference.
You went to the broker convention and walked around and saw all the investors and went and got their flyers. That's what I used to do back in the day. And now we have the social groups, but they're actually socially tied to mortgages in the industry for people to get help. So, that's what I did too. I joined, all those groups and became buddy buddy with people. And some of those groups, men can be quite bullies, sometimes to girls when they ask questions. So me and another girl, we created a Facebook group on Facebook for mortgage originators that are female. And don't anybody beat me up. You have to be a girl to get in. But it's basically a safe space for everybody to come vent, talk about guidelines, questions about programs, who's the best person for this, and it really helps. And I have met people in so many other states. So now if I get a call that, I can't help them, they're buying in Kansas or, Nevada, I know offhand 2 people in Nevada that I could refer right now because of those groups. Mm-hmm. That's huge.
And absolutely. That's huge. And also like our industry is always cyclical, but it's also regional. And something that's happening here, you and I were just talking before we started recording, where our market here in Northeast Ohio is back to 4, 5, 6 offers on a property, no matter the price point. And it's back to just a crazy, crazy market for sellers and buyers. But then I talked to somebody a couple weeks ago, or about a week ago, that's out in the Vegas area, and they're like, you can literally buy any house you want. Yeah. And, is that the market, is that what we're going to experience here in the next couple months? Is it making its way this way? Are they ahead of the curve? Like, what's going on? What's working for them? And it's great to have those connections because our market is completely different from even Columbus, right? Which is an hour and a half away from me.
And it could be a trailing trend that could be coming.
What's working for you? Because what in 6 months and 12 months and 18 months, is that what my market's going to be like? Well, what did you do to get through it? What were you doing to help your clients? Let me network and see what I'm doing. What kind of loan programs were you guys seeing? What was the shift you guys were seeing? So not only can we prepare for, brace ourselves, but also build my business out in an appropriate way. And, I just talked about it at the beginning of the podcast where knowledge is so important now. It might be the most important thing. What's one way we get knowledge? Making those relationships, having those connections, having those conversations.
I came to ALCOVA with 5 other branches. Those branches are mainly in Virginia. One of our branch partners has moved to Florida, so he's in Florida. So it's kind of amazing because we have a group text and there's 6 of us in there. And depending on where they're at, even in different parts of Virginia, you can have a completely slow season versus it's booming, So I love to keep in touch with people and see what the trends are. Not only, if foreclosures are going up. That's something that the Atlanta market, I don't know if you've looked at HUD Home Store lately, but during COVID, there were like 2 homes at any time on the HUD Home Store. Now those homes with $100 down, there's like 41 homes in Georgia. So they're starting to come up, and that's, something that may be an opportunity for one of your clients that is getting beat out by investors. Maybe they go and buy a HUD home with $100 down because those are only for primary home and, buyers, when they're offered first bid. So, and those are things that unless we're having this podcast or Power Up, or Wednesday Wake Up, or Tuesday Tactical Tuesdays, or the marketing month or quarterly meeting where they ask what's working, what do you need? Those are actually where I get some of my ideas. Yeah. And so again, it's a great culture. It's great to get out there. It's good to meet other people in this industry because you never know. I was able to, because of social media, I've been doing so many videos lately, I've been getting a lot of referrals, and I just got a referral for a man who's he's a dealer of manufactured homes. He's going to be putting 8 homes on lots a month. He's been doing it. He needs another construction lender that can do these. And you know how easy that would be compared to regular construction. You just hook up the water, the power, and you got it. And the permanent foundation, knock the wheels off. But I had to refer it to someone else who does construction loans. Guess what? They texted me last week and thanked me profusely for that lead, and they're going to remember me when they have a deal they can't do. That's what it's about. It's about helping the client. And sometimes I lose them, sometimes I lose them to a bank, a better rate, something like that. But we win some, we lose some. I can't win everybody's heart. I try to help everybody. And I give all of myself. And that's the best I can do.
Yeah. Don't sell yourself short. Come on. You can win
I
everybody.
give 150%. Right.
There you go. And also, I want the record to show that you said that you started a group because the men are sometimes bullies to the women. That I was never a bully to a person. I was only bullies to companies. Okay.
No, you were not one of the guilty. Yeah, I want to elaborate. That's why I knew you were familiar, because I liked your comments. I wasn't like, okay, you're a jerk.
It got to the point where people were making like posts, and then they would be like, well, we're waiting for Mike to come in here and comment. And then it would just be like,
oh, yeah. Got to get this smart ass comment in there.
Oh. I remember those days. Yeah. And actually, going back just to the Facebook group days, like during COVID, the Facebook groups helped me tremendously because it was such a wild time. And I had a pretty cool conversation with Bobby. I try to have that conversation with as many like high level people in the mortgage world during that time, because like it was weird, and people don't understand how weird it was, and how overnight you just saw investors just close up shop and warehouse lines completely eliminated. And
imagine 2008 that I lived through.
Right. I think the biggest difference, and this is what I was talking with Bobby about, the biggest difference was like in 2008. I mean, I've heard stories about small mortgage companies sending out loan packets, and then, it's in transit through UPS, and then that bank.
The wire never came, or that wires were used for other people's transactions. Right. And then later in the day, those wires were there to fund others. Washington Mutual closed their doors. Boom, they're gone.
Yeah. It was, and so during COVID was pretty insane. And then what people didn't realize is that once some liquidity came back, that they had very, very strict overlays. Like I remember most of the companies in my area were not doing anything under 680. And oddly enough, the company I was at wasn't doing anything over 680. And so like we were referring deals to each other because we all had a huge pipeline filled because rates were starting to drop organically. And then purchase season, we were coming into March and April. So we were starting to have a good purchase season, and it just stopped. And we had that Facebook group, I remember hearing, hey, this is what we're doing. This investor's doing this. I'm working at this company, this mortgage company, this independent mortgage bank, and we signed up with this investor. This is what you guys need to do. Like, it was very, very informative on that side of it. But then also, hey, we have to take care of the clients at the end of the day. So those connections that we've made, and I've made so many connections with other loan officers, even in Ohio through that group, where I'm like, hey, our company can't do this. Is this something you're able to do? Take a look at and still take care of the clients. So it's, like I said, Facebook, social media, especially Facebook, is our town hall now. And it's, it is definitely interesting to see. Just so funny. Like I just remember Facebook not being what it is now, and it is literally just a social billboard. And even people that do not, that work that normal 9 to 5, that don't have to be public facing, they're still posting their Mary Kay or whatever little direct sales thing. They're still advertising. My kid's doing a fundraiser. Here's the link. It is 100% the bulletin board at your local grocery store.
Well, and the one thing that I want to say, yes, that is right. But groups, I don't know if you've noticed this, but groups have now got AI moderators, and a lot of real estate groups. It's funny because people think that they're talking to a real person, but it is a trap. It's a post, and it talks about, I can't get any leads, I can't close, I just had a loan blow up, and I'm gonna miss my mortgage payment. Where is anybody getting leads? And then you see these people posting about these great leads that they have. Those are bots, people. Those are bots. Yeah. They are basically trying to sell, and it's crazy because the more I have seen it, it's just more and more groups are doing it. And you got to go to the group details and look at it. There's a disclaimer they're supposed to have.
Yep. You could tell the local group for the village I live in, because it's less than 2,500 people. have like the AI moderator. It's like, what's your favorite restaurant to eat at in Creston? And everybody's like, we don't have a restaurant. like listen, we already know. Like,
Trick question.
what's your favorite hiking trail? The sidewalk back to Dollar General, I think. I don't know. Yeah, like no, we don't.
The bus stop, maybe.
I'm so happy that sounds actually really bad to say, but let's just say one of the positives of like my my grandma, she passed away, but she would be absolutely calling me every 5 minutes. Did you see this video of so and so? I'm like, nah, it's not real, Grandma. It's not real. It's just AI. It's okay.
Yes.
But, yeah, those Facebook groups. So which is cool because so I know when I first met you, well, just let's call a spade, Lindsay. You weren't doing any sort of content other than maybe just social media posting, and now I see your videos and you're out. And one thing, so at our at Power Up, I am going to speak for a little bit. I'm going to say like the time of making like. I used to say to you, just make the damn video. Just make a video. Well, that time's passed. Like that's gone. You can't just make the video anymore. Your content has to mean something and has to have, you can't just record and go. Like those days are over. And what have you seen? Because I know for a fact, ALCOVA, obviously I'm sitting right here. ALCOVA embraces the loan officers making content. What's easiest for everybody. I've done workshops at corporate where, during Power Up, to get people to come in and, this step by step, this is how we make a video. That's how we're going to do it. You were there for the last one. And, they've really embraced it. So what have you seen? And you didn't know I was going to ask this since you started doing it consistently. Obviously you're very consistent with it, but what have you seen in your business?
I have seen business pick up tenfold. I'm getting questions. I'm getting messages from people on LinkedIn, Instagram, Facebook, YouTube. The biggest thing is, I wasn't really seeing it right away. And a lot of people would have stopped. They would have stopped doing it and said, this isn't worth it. But I just kept doing it. And I was like, you know what? I need to do some more shorts. I'm going to divide up this video another way. And I'm going to, program the videos. And what you even taught me, I mean, if I wouldn't have taken that Reels class from you during Power Up last time, I wouldn't have known about a few of these programs and things that make it so simple for me to get done now because I have a routine where I get it done and then it's set, it's done. But I have seen it took about 3 months for things to really set in. And, I have gotten messages from people that, I'm like, how in the world did this person find me? And people telling me I've been recommended by ChatGPT, people telling me I've been recommended by TikTok. And I'm like, I'm not even on TikTok. What are you talking about? So yeah, it's been crazy. And you got to get out there. You do.
Yeah, it's, and what I talked about in that workshop is that the number 2 search engine that's used is YouTube, which means that people are wanting to see videos to instruct them on how to do things.
Exactly.
And that was before even, I know we talked about ChatGPT and I showed you guys how I, have a full-on conversation with ChatGPT, but, it's before we were using that so much as a how-to search engine. And now, it's absolutely, ChatGPT knows that we consume data through videos, so they're going to recommend videos whenever people are searching for something. So that's it's one of the biggest importances.
Facebook literally sent me a message, and I thought it was some kind of scam. Yeah. But they said, your posts have been getting so many views that we're going to automatically choose 40 or 60 of your videos and spread them out and post them over the next few weeks. I'm like, what? So without me doing anything, it wanted to pick up my videos and just spread them themselves. So that is something I didn't even know that social media did. I
feel like Facebook is actually one of the best platforms for getting exposure. That and YouTube, but I have more followers on Instagram, but I opened an Instagram account after I opened Facebook.
My thing is that everybody says, oh, you should post a story to this, a post to this, a video to this. I post it all to everywhere. I don't care because there are people that may not see the story on Instagram, but they see it on Facebook, and vice versa. And so, I don't just post business stuff. I post a lot of how-tos, misconceptions with mortgages, little shorts, but I also do personal things. I talk about politics. I talk about my nephew's baseball game. I talk about the snake that I caught from underneath my refrigerator this weekend. That thing was like 8 feet long. It's crazy, but it was a rat snake, so that's okay. I let it live.
It's called a nope rope, I think.
Yeah, nope rope.
Yeah, we don't get many snakes up here
Yeah.
in Northeast Ohio.
The
but yeah.
8-legged kind are the nope ropes for me. That's I don't know what that would be called, but it's hell no. No.
But so what it does, and I say this to every single person, is that as a loan officer or a real estate agent, anybody in sales, insurance agent, whatever you're doing, the whole goal is to have like 5 quality conversations per day. That's it. And you can get those any way possible. And what I realize is like when we're making content, when everybody, especially a loan officer, when you're making content, you're trying to chase a lead, and that's the wrong thing to chase, right? What we want is we want to
Be chased.
be chased and be consumed. And I almost stopped. So a lot of people don't know this, but I almost stopped making content. I was doing my podcast, I was doing the reels, I was doing, the funny clips that we do. And I almost stopped because I'm like, I'm not seeing anything. I don't see the views aren't crazy. And I saw one of my, somebody I graduated, I saw their mom at the grocery store, and I was not friends with her on social media. I have not seen her in like 15 years. And she's like, "Oh, hi, Michael. How are you?" And I'm like asking
I
questions.
see your videos.
And she's like, "I really like that video that you did about when we were talking about doing a cash out refinance. And is it okay if my husband and I schedule like a meeting with you?" And I was like, "We didn't like it. We're not friends on social media. How'd you know about that?"
Yeah.
And I'm just in my head, I'm like, "Absolutely, yeah, for sure." And then so we do the loan app, we close it, and I was asking, I'm like, "Hey, so by the way, when you guys talked about like seeing my video, how did you see it?" She's like, "Oh, well, somebody was on their phone when they were sitting at their house, and she like heard, and they were listening to it and heard the video when I was talking about cash out refinance." And she's like, "Go back to that." And then she saw that it was me, and then was like, "I need to reach out to him." Never did, and then saw me at the grocery store. So I got a loan from somebody who didn't even have social media but heard it and said, "Let me see the phone." So
that's amazing.
The power. Yeah, that's the power of doing content. And that's the reason why you're doing it. So like I said earlier, this is the third time. It's like I'm trying to hammer this in or something. But people don't pay for information anymore, right? I could sit there and tell you, I can make a video about 3.5% down, get you an FHA loan. I could say that no money down is a USDA loan. I could say you could buy a home in this area for no money down and no PMI, right? I could say all that. But you can also go to Google and find that. You could also talk to the person that's wearing a headset that's sitting in the call center. You could talk to them and they'll tell you about that. But the second that you give advice and you give knowledge and you become that advisor, especially when you turn that camera on and record it, then people start to listen and people remember. And whether they like it or share it, I'm not trying to become like the next YouTube all-star.
Exactly.
I just want people, when they see me, to recognize it, or when they think about a mortgage or when they think about debt, I
want them to trust me, know that they can trust me. And it's not just that I know my stuff on mortgages, but I also love dogs. I have lived here all my life. Like the things that a lot of social media is fake. And the more real you can be, the better off you are. Don't just show the good and the good takes and everything. I mean, if you have a blunder, if you have a funny story or a sad story, share it, because you're going to connect to someone else who's going through the same thing. And that to me is what's gotten me a good bit of my business. I mean, I've been in the business 24 years, so a lot of it is referrals. But I mean, my 5 contacts come like nothing every day, because I get calls out of the blue from either an agent that saw a video that wanted to know more about the buy before you sell, the trade-in, somebody who saw a HELOC and wants to apply. I mean, I just, I keep doing the content. I become an open door for everyone to come. If they can trust me, they know I'm going to look out for them. I'm not out for my own pocketbook. That's what I want. And that's what's happening by what I've done.
Yep. Yeah. And it's, I always try to tell everyone, imagine getting 100 people in a room and having them listen to what you have to say. And that's what, if I get 100 views on a video, that's exactly what happened. And the first response, everybody's like, "Yeah, but they see your video and then they scroll by." I'm like, you ever spoke in front of people? I don't think anybody listens to you. You're lucky if like 5 people in the room are actually listening and actively listening, right?
Yeah.
So I'll take, you know how hard it is to get in a room in front of 100 people, but I'll take a 100 view video any day of the week. Absolutely.
Exactly.
And it's building that social proof. It's building everything that you're not doing with your business. And my favorite thing to say, so if you're a loan officer and you have not started the content train yet, you got to get on it, whether it's, I mean, you have to have some sort of video because, like I said, YouTube being the number 2 search engine now, it's got to be video. But imagine the scary thing that's happening, especially in your market now, Lindsay, and you wouldn't even know this, but a competitor, even though we like them, we talked about that in the beginning, right? But we like them, but they say, hey, you're going 3.5% down. Here's your pre-approval letter and good to go. And then all of a sudden the client starts seeing your videos or searches up mortgages or whatever, and it's recommended to them. And then you're telling somebody how they could actually buy for no money down, or you should do this 3% down, or whatever it is. This little nugget, and this is why. Hey, actually, I'm going to put 20% down on a mortgage, and you make a video saying, actually, I would do 10% down and do no PMI, and then take the other 10% and put it into a financial instrument and grow generational wealth. Now, all of a sudden, they're questioning their first loan officer. Now they're going to reach out to you, and now that person just lost, because the number one thing in business, the hardest thing, the most expensive thing to do is to obtain a new client. So now you're losing that because, yeah, they could have offered that. Yeah, they know that. But now you're able to tell that to somebody who you've never had that interaction with. So that is the power of creating content. And so it's cool to hear because I've been seeing your content. So it's great to hear, the before and after and, what you're seeing.
Yeah. Well, and it's important to be with a great company that you can offer the products that the people want, but it's, consistency also with your follow-up as a loan officer. I've got 24 years. So the people that I helped with purchases, their kids are now calling me to get pre-approved to buy a house. And that to me is just, it means everything to me because, we've worked together on maybe 10 deals through the last 20 years. And now, kids are going to buy a house in Colorado. And, so I'm sending them report cards through MBS Highway and going over the rent versus buy because they're talking about renting instead of buying. And I'm like, well, you guys are going to be there for 5 years, even though you're going to be in medical school, you're going to be working, dad's willing to co-sign. I mean, there's so many things, that an advisor is who you want to be with because they're going to advise you the best route, but they're going to show you all the options. Somebody who is, just a transactional person is going to quote you the lowest rate, but they're not looking out for your best interest. It might come with a lot of fees. It might come with a prepayment penalty if it's a non-QM or, there's always things that, can be structured differently to benefit, in most cases. And the Rockets and the big conglomerates are not going to do that. They're not going to say, oh, how about we structure it this way and look at this, down payment assistance option, or how about we look at this? There are times for banks, there are times for credit unions, and there are times for, lenders like us, correspondent lenders. A lot of people have a misconception about us that because we're a lender and not a broker, we don't have choice. I mean, we have over 40 investors. I mean, we have our choice. I mean, we have some more than some brokers have. And, some brokers send their deals to only one, even though they swear that they shop it with many. It's just, I can't sing enough praises about ALCOVA. It's funny because people call me to recruit me and they want to have coffee. And I can't decipher, Michael, and you're going to have to help me. Maybe I'm Power Up. We can talk about this, but I cannot decipher who honestly wants a relationship for like referrals and who's trying to recruit me. And I just get to the point where I say, listen, I'm willing to meet for coffee. If we can share ideas or, refer deals, that's great. But I will die at ALCOVA. Like I will work here until I retire. There's no way.
You're not being paid to say that, by the way. So
no. And I'm seriously, and recruiters will say it to me. They're like, well, let's just, we can meet and we can just keep it on the back burner. Yeah. Listen, I don't have time for that. If I ever decided that I wanted to go, I will reach out to you. But I am going to retire here. I love ALCOVA. I'm kicking myself that I did not come here 5 years sooner. And the 5 others that I came to ALCOVA with from a company that we stayed with until they changed over to a very large servicer that I will not name, but we all came from there. And it's about ALCOVA culture and all the options that we have. I mean, there's so much here and so much team camaraderie and togetherness that I would never leave.
Yeah. And if you're a loan officer that is, we'll just say basically we talked about a lot in this, right? To wrap up this episode, but we talked about content. We talked about that teamwork environment of not just in-house with us, but also reaching out to other people in the industry. But I would say if you're a loan officer that is not doing, first of all, if you feel like you're competing against your office, number one. Number two, if you're a loan officer that is late to the content train and you want to get on that and start building out videos and social media and all that kind of stuff, there is literally not a better place, because you get everybody at corporate, everybody at ALCOVA, all the loan officers, we get together, especially at Power Up. We have regional things that, little Power Up, regional Power Ups that we call them. And we get together, and that's all we do is we build each other up, and we're there trying to get everybody. And, this is what's working for us. This is what's working for us. Let's record this here. Mike is good at editing. I always get to edit, right? I'm always the guy that gets to record and edit.
You're the one working the hardest.
Yeah, everybody asks me that question, right? So, it really is hands-on. That's why I love it. I'm looking forward to Power Up here next week. And it's it really does. I love the name Power Up because it is. That's what it is. It kind of sounds like a little bit of a Power Rangers. I kind of wanted to go with one of those teams one time, but it's a culture unlike any other. And
I know this one's going to be very interesting because they all have themes. Okay. So last year it was Battle Ready, or the year before, I think. And then, last year was the Mission Impossible. So we have that shirt. And then this year it's a wrestling theme. So I cannot imagine what's going to go down.
I'm kind of hoping that I get put in a headlock. I'm just hoping for that.
Yeah. Oh, that'll happen. That'll happen. Yeah.
Probably. Right.
Definitely.
Well, Lindsay, thanks so much for joining.
Yeah.
Where can people follow you at?
Oh, everywhere. I mean, I have a link tree that's at the top of my Facebook page. You can follow me on my socials there. I'm on YouTube, Twitter, Instagram, everything Lindsay the Lender. That's my tagline.
There we go.
Yeah.
Awesome. All right. Well, Lindsay, thanks so much for joining. I'll see you in a week.
All right. See you then. See you at Power Up.
This is the standard. This is the work. This is the mindset behind the results. Built, not bought, earned, not given. This is the room where leaders are different. Built through consistency.